Good evening, everyone, and welcome again to another panel discussion on investing in D2C brands. For this session, let me welcome our moderator, Mr. Raman, partner, Triton Investment Advisors, our panelists, Ms. Sakshi Chopra, principal, Sequoia Capital, Mr. Abhishek Goenka, head and chief investment officer, RPSG Ventures. Dear audience, please ask questions in the chat box. Our speakers may answer a few at the end. Welcome all of you. Over to you, Mr. Dev.
Thank you. Good afternoon, everybody, and thank you for joining us for this session. I will very quickly set context around this topic for discussion here, investing in D2C brands, before we jump into the discussion. We have about 40 minutes, so we will have the discussion for 25 to 30 minutes and then take questions after that. Everybody loves a David and Goliath story, and in the world of consumer brands, D2C brands are just that. When a brand like Dollar Shave Club takes on a large behemoth like Gillette and shakes up the market and finds success, everybody is rooting for them, and that makes for very exciting copy. Incumbent brands have great brand recall, large balance sheets, and immense distribution power. In fact, historically, new brands have often struggled with trying to break the hegemony of incumbent brands for the fight for shelf space. Luckily, with the advent of e-commerce, there is a more level playing field for new brands now. But brands are expensive to build, and the journey needs committed investors who are knowledgeable and don't lack in courage. My co-panelists are some of the smartest investors in this space in India. While Abhishek, who heads RPSG Ventures, is an early stage investor, Sakshi, who works for Sequoia, makes later stage investments. But all the Davids need all such investors standing firmly behind them for their story to even stand a chance. So let's quickly move on to the discussion and hear the views of our experts on this. So I'm going to start, Sakshi and Abhishek, with a question that I'd like both of you to answer, which is, what has your experience of investing in this space been thus far, and what is your view on this space going forward? Sakshi, do you want to start?
Sure. Hello, everyone. So I think we at Sequoia think that D2C is a very, very interesting area of opportunity. It is simply because how our take on D2C is that, this is just redefining the consumer brand story, with the online first approach. So we feel that there are a lot of brands that are being created across categories, which are being built on the back of a very differentiated value prop to the consumer. So most of these brands are really are very purposeful brands that are addressing a real need or gap in the market. And with the customer at the center of everything that they do, whether it's product, whether it's pricing, whether it's distribution, or whether it's service. So I think this is just a whole new way of selling. And in the journey, many wonderful brands will get created. We are very fortunate partners with some of the D2C brands across categories. So in the nutrition and wellness space, we have HealthCart. In the personal care space, we have Mama Earth, Yours, Free Will. And in the home improvement and home furnishing space, we have WakeFit. And in the kids developmental space, we have a young brand called Skillmatics. So that's our D2C portfolio.
That's a pretty large portfolio. Abhishek?
So I actually share views of Sakshi. I think what D2C or this category has seen over the last 3 years is a massive change in customer buying behavior. What was traditionally dominated by some of the incumbent brands, very, very heavy on the distribution and marketing side, right? I think some of the startups have, clearly disrupted that on the back of, very solid customer engagement, speed to execution, innovative customer engagement through, social media, and probably that's one reason why, we are seeing, unicorns or minicons, in this segment, and the speed to probably touching about 100, 200 crores of revenues, which earlier used to take a lot longer, is actually a possibility now. So we are very gung-ho about this space. In fact, our entire fund is focused towards investing around consumer brands and consumer ecosystem. In fact, more than 75% of our portfolio revenues actually come from pure D2C. So some of the investments that we've done on the apparel side, we've invested in a company called the Soul Store. There's a healthy food brands called True Elements. There are three brands on the beauty and personal care segments. M Caffeine, Vedix, and Spincraft.
That's a big bet on the space. But when I saw this, the topic for discussion, and this is something I've often thought about, D2C brands as they call them. Is this a separate category, or is it going to be so ubiquitous that every brand will have to have a D2C strategy? I mean, is this just another channel for every brand? Sakshi, you want to take that?
Yeah. So I feel like, at least like how I would think of it is consumer 2.0. And in my mind, if you're a brand, you have to be available wherever the consumer looks for you. So some of the starting point for some of the traditional brands, especially the ones coming out of the large houses like Unilever, P&G, for them, the obvious distribution was the offline network. But now for some of these young challenger brands, they have chosen to be online first, and therefore, whether it's their own direct-to-consumer channel or reliance on third-party distribution channels like Amazon, Flipkart, Nike, etc. But I think if you want to gain scale in India, and you want to be relevant to consumers to all parts of the country, then over a period of time, these brands will have to go omni-channel, and that means that they will eventually have to go offline as well. But I think the fundamental difference between some of these young D2C brands is just that their DNA is more online, and that's why the starting point has been the online channels. Now, coming to your question on the direct to consumer channel, like how important is it? I think it's a very important channel. It's very strategic in nature because literally that is your access to your consumer to understand their purchasing behavior, what they like, how often they come back, what are their needs. So I think, and also experimentation. You can actually make many launches, and if it's not working, quickly retrieve, kill the product, without too much damage. So I think D2C is a super strategic channel in my mind, but it has to also be built very, very carefully. So in our mind, like, whether it's a Wakefit or a Mama Earth, almost like, or a health card for that matter, a large part of their revenues is coming from their own channel simply because, they've over a period of time built it super strategically. They have probably a different product range as well. They have special offers running, and they've multi programs. So the consumer is also becoming habituated to coming back to this channel to shop.
Yes, that makes sense. But Abhishek, given your large focus on this space, would you be asking your companies to actively develop an omni-channel approach, or how do you view this?
Okay, so let me answer this in two parts. Given that we usually come in at a much earlier stage of the company, usually at a C to a Series A, when resources both in terms of funding and team size and infrastructure available to the company is relatively limited, right? So at that point of time, our what our advice to founders has always been that you focus on just one or two channels, at the most, go deep over there, show your proof of concept, establish a very strong brand loyalty in those channels first, rather than kind of splitting yourself too thin initially. At a later stage, I think the hat kind of changes because we are cognizant of the fact that look across categories, still offline continues to be more than 90%, of the sales, right? So you can't ignore that. And at the same time, Sakshi had also pointed out, marketplaces are equally important, right? There's eventually, you will be battling for the same customer, on your website, versus let's say a marketplace, right? So I think omni-channel is important, but I think to initially prove your proof of concept or your brand and certain key metrics initially is very, very important. That's how we look at it.
Right. And Abhishek, carrying on with you, so given that you have a wide portfolio, are you seeing that certain categories lend themselves to D2C better than others? I mean, or would you go D2C with every category? What's your take on that?
Okay. So given the fact that the online customer base, which is actually transacting in India today, is largely less than 40 top 10 cities, right, as of today. Now, what categories do really well D2C are the ones which cater to this TG. And at the same time, I think it's important to have decent unit economics when you're targeting D2C. To give you an example, like we all know, snacks is a massive, maybe 40,000 crore or category in India. But selling a 10 rupee snack online is going to be really, really difficult. The logistics cost, and the marketing cost is just going to kill you. At the same time, look, if it's maybe a nutraceutical play, if it's a beauty space where your AOVs are north of 500, right, or gross margins are very decent. Now that gives you the flexibility of absorbing your CACs, absorbing your logistics cost, and that's where um, just a pure brand play becomes very important rather than relying on a logistics play.
Right. I want to come to a question. I want both of you to answer this because I think this is uh, uh, something that I feel is a very important question. That are we really seeing brand creation in this space, or are we actually just seeing companies or brands pursue performance marketing strategies and trying to push sales rather than really creating brands? And what would your recommendation be to companies in this space? How important is brand creation? Either of you could go first.
Sure. Let me take a first dig at it. I think brand creation is. I cannot overemphasize on this. Eventually, any example of maybe 1,000 crore uh, consumer company that you'll end up looking at in brand is the core of it, right? So performance marketing or can take you from probably a level of 0 to 1. Okay, but sustainability repeats would only come from a very, very strong brand, right? So for us, in fact, we insist on every founder to invest significantly behind both brand awareness and brand recall. Okay, the strategies, the timing of it could differ, but this is one of the key things which we focus on across all our portfolio companies.
Right. And Sakshi, as a later stage investor, what would your view be on that?
Yeah. So for us, what we take the land and go and go roaming around looking for the winners in every category are brands that have a unique insight. Because within the D2C framework, it's pretty easy to go online, list your product, and start selling and be in business, right? The barriers to entry from a distribution standpoint are relatively lower, and therefore, your starting point is a very unique insight. Otherwise, it's damn hard to cut through the clutter and differentiate your value prop versus others. And I think if there is genuine product market fit, then most founders, as we've seen, they use performance marketing as a growth hack to basically go and distance themselves, create that ample distance between themselves and the number two, so that they can actually maintain that safe distance. And then I think beyond a certain critical scale, things like when you start measuring your retention, when you start measuring like are your AOVs trending up, what's the loyalty pattern, etc. That's when things like brand marketing and brand investment become increasingly important. And I think also brand marketing. I believe it's important, and I think the thinking should be there from day one. But the investments in brand marketing, typically what we've seen start at a certain point when product market fit has been achieved, and also it's very clear that there is a unique insight which you can quickly take and amplify through ATL spends as well. And I think it's really important. So, for example, like I think. If we look back in the journey of say Awake Fit, in the first 1 or 2 years, they spent very few dollars on brand marketing simply because the business was small, and the priority was to keep growing and growing very profitably, and also make sure that the innovation cycle is really firing. I think some of those foundational building blocks were laid down, and and they attained a certain market share relative to others in the category. That's when the importance of now starting to invest in brand, because as they start thinking how do you kind of get into more adjacency product adjacencies, etc., that's only possible if you have a very strong brand and customers love what you do. I think so. Yeah, so now we're seeing a lot of founders want to really take this, I would say, spend more seriously, and therefore they're actually favoring building a brand versus only just doing performance marketing.
So, Abhishek, the message she's sending your companies is that when they go to her for their next round, they should actually have enough sales so that she can actually see the trend on metrics. And then she's going to give them the money to spend on branding.
Absolutely. Point taken.
So actually, this is, I wanted to touch on this. This is also something that I can see in the chat box as a question. It's pretty obvious in these times is how has the pandemic actually affected the space? And I think the slightly non-obvious question there I would like to ask is, how have you seen the smaller companies react in terms of getting their supply chains back in place? Because obviously demand would be better because e-commerce is probably done well in these times. But how have they managed their supply chain in this time? Again, either of you.
Yeah.
Yes. She, do you want to take that?
Sure. No, I think the months of actually the last 2 weeks of March and the months of April and May were pretty much of a washout for a lot of brands that weren't listed under the essentials category. And even if things started to ease out, supply chains were completely broken. But I think effective like June, we've certainly started to see reasonable recovery, especially for products across personal care, across hygiene, across nutrition, across food and beverages. We're seeing reasonable comeback, and our hope is that by September, October, they should reach Feb levels. So actually, we continue to be quite optimistic on the recovery side. And supply chains, I think things have eased out. I think the main issues were faced in the months of April and May. I hear less of that, at least over the last couple of months.
Even the people who were importing, I mean, like I was talking to some companies in the toy space, for example, and doing extremely well prior to the pandemic. Their supply chains have really struggled because they were importing from China, for example, and I don't know, Abhishek, early stage companies, how have they done on this count?
So very similar experience. April was a difficult month overall, right? We actually saw demand started picking up from around May and June. Okay. I think the way most of the companies that we've kind of met and interacted with, they've kind of they've handled this the entire COVID scenario extremely well, right? Whether it be from a cost rationalization perspective, or cutting down on marketing spends, being innovative from a back-end perspective. I think, and this is one reason why suddenly the cost structures of most of the companies have become super lean. So to answer your specific question with respect to supply chain, I agree. That this is one segment where I would say, uh, things, at least for most of our companies, are back to about 80-85% of pre-COVID levels, right? Especially, let's say, where there are whether imports involved. It could be from a packing material perspective, it could be from an ingredient perspective, right? But in most of the cases, Indian supply has worked. It's probably kind of affected operations for like a few weeks to a month at the most, but it's I've not seen this being like a major bottleneck to growth.
Yeah. Maybe just to add to that, I think the ones whose supply chains probably have got impacted are the ones who are in the consumer electronics space, where they are sourcing from China. But I think it's a golden opportunity to kind of for them to figure out how they can be made in India brands.
True.
And I think my view is that it's an opportunity for brands, the D2C brands like say Boat and Lifelong. These are fantastic brands, whether in the personal electronics space, gadget space, or kitchen appliance spaces. They've quickly kind of pivoted and figured out alternative manufacturing hubs, whether it's India or outside India, given the restrictions around being able to source from China.
Yeah, actually, one thing that I really like your perspective on is, given that this is an unusual bump in the journey of companies, when you look at the next round of funding, Sakshi, would you kind of make allowances now for how they've actually managed to perform with the early round of funding, or would you still kind of keep the bar as high as you would have without this bump? How do you kind of adjust for a bump like this when you look at stories today?
So, no, I think we have no choice but to make adjustment for the months of, April until July, August. That's reality. That's a new reality we're living in. So, I think there are some companies that have been more hit than the others. But fundamentally, we are not momentum investors. And for us, what we try, at least in our view, it is to really find the one or two needle moving companies in every sector, in every category, based on really the fundamentals of that business. So I think our things which should have not changed in that business should be like gross margin. Things that we look for is like defensibility of the business, of the product. What are the moats in the business? I think those are some of the things which should have not really changed. And I think the outlook on FY21 will be with the adjusted COVID adjustment made. So I think if the recovery from, say, the months of July, August, September onward seems to be positive, I think that's a good sign. Yeah.
I'm sure that's good to hear for many promoters or founders who are probably attending this session. But given that we have both of you, I'd like to put you on the spot here a bit and kind of ask you to, kind of explain what you look for where in an investment when a proposal comes to you. I know you did answer that a little bit, Sakshi, so maybe you just want to continue from where you left off, and then we kind of come to Abhishek. I'd like both of you to answer this question.
Yeah. So each time we're evaluating an opportunity, there are a few questions that we look a lot deeper into, and these are some of the things we answer upfront. First is the market, the attractive market, the attractiveness of the category. Our desire is to only work and back companies in A plus neighborhoods. So that's something, and the indications of an A plus neighborhood is really the TAM, the gross margin profile of that business, What do comps, publicly listed comps, trade at in some of those categories? Have unicorns or large outcomes been created in some of those categories? What's the absolute market cap created in India by some of the listed companies in that in those markets? So those are some of the fundamental questions we answer to understand whether this is an A+ market or not. I think the second thing, which is really important for a firm like ours, is are we backing the best team in the business, in the market? Is this an A+ team? And that's the homework we have to do. So because we only do so many sectors and follow so many themes, so our priority is to really find the best team in that market, and then it makes life a lot easier. So I think an A+ team is the second thing we look for, and then I guess the third comes down to the inherent characteristics of the business, the metrics. The performance of the business. Is it a fast growing business? Is it being run with a profitability mindset? What is the capital? What is the extent of capital employed? How efficient have they been with the capital that they've raised? And some of the unit economics that I think every investor looks for. That's quite standard, I would say. But these are some of the things that we look for.
And are there any softer aspects that you look for that are not quantifiable?
Yeah, absolutely. So I think for us, we look if the product that which is the underlying product has that product attained product market fit or not. And that, frankly, you can see, for example, in a category like D2C, it doesn't take too much time and effort to kind of figure that out. All you have to do is go on to Amazon, read the number of reviews that they have, what's the average rating, what do consumers love about the brand, what do they not like about the brand. Also just the retention cohorts are very telling. Is there loyalty for that brand or not? I think but that is more data centric. I would say, just the reviews and the ratings tell you a lot, and how that particular brand is doing relative to competition.
And Abhishek, how does this stack up when you look at early stage companies? What do you look for?
So they've, very similar things. We also look at, the addressable market. What they are, trying to build. Is there a gap over there? How large is the incumbent? If there's an issue, or if there's a demand or requirement from a customer's perspective which is not being fulfilled currently, is the company doing that? Team for us is very, very important. Third, I think one of the other things where we actually spend a lot of time on is the product quality. So unless and until it is an absolute A++, sort of a product, we would never back it. So a Me Too product, selling through a very innovative marketing strategy, or that is something that we won't be comfortable backing. If it's a solid product, kind of addressing a customer need, or delivering that experience, time and again and consistently, right? That's what we like to underwrite, and we speak to a lot of customers at that point of time. Just to come up with whether this particular use case or need case is being addressed or not.
Right. Maybe we should kind of take some questions from the audience as well at this stage, and then if time permits, we can come back to a few more questions of our own. So one question that's interesting is, in times of GDPR and concerns on user tracking, along with the movement towards walled gardens, how do you see D2C marketing evolving?
Dave, can you repeat the question, please?
So,
yeah, I'm sorry, I didn't fully follow it.
In times of GDPR and concerns on user tracking, along with the movement towards walled gardens, how do you see D2C marketing evolving? So I guess this is around, the tracking of customers and privacy issues and things like that, I guess. Online stalking. Do you see that as an issue for the sector? I guess that's the question.
Not. I don't know. I'll probably take a crack at it. And, Sakshi can add to it, but I don't think so. This is particularly like a big issue, at least from a customer data sort of standpoint. If see either wherever, I mean, if the brands are selling on their website, the data which they are accumulating for customers, I've very seldom seen that that data being shared in like with exact details with someone else, right? And alternatively, in with other marketplaces, things like Amazon, Nykaa, I'm sure they are very very reputed organizations. So I really doubt if they would be indulging in things like this. I don't know if I've answered the question, but honestly, data security is not something which is like a top concern for us.
Sakshi, do you have anything to add to that?
Not really. I mean, I think how brand marketing is really about creating a loyal consumer base, right? And coming in to the topmost consideration set of every consumer. And there are many ways to achieve that. Traditional marketing, of course, ATL spends is one such way. But I think consumer engagement, customer engagement is super important through community building, using influencers, running loyalty programs. But I'm sorry, I don't have a real answer for the question asked around data security.
No problem. I think both of you made a good attempt at it. So globally, I mean, if you were to talk about kind of role models in the D2C space, what comes to mind?
So globally?
Yeah, globally.
I really love Nykaa as a model.
Mm-hmm.
Being kind of customer retentions, the customer experience that they've been able to provide, the assortment of products. It's something which is totally world class. So that's one company that I really look up to.
I guess if you want to take a global brand in context, then Glossier is a great brand in the beauty space. And they're a blue-blooded D2C brand, and they play on the whole content to commerce play. It's a brand that started as a blog, and and they were able to kind of then quickly pivot into a commerce platform as well for beauty, and under the brand Glossier. And they started with skincare products, and now they've because they just enjoy so much of consumer love and repeat purchases and loyalty, they've extended the product range into makeup as well. So it's a very fast growing brand, and I think one of the more defensible plays I've recently seen in beauty.
I guess, I mean, you all must have invested in some of these in this space globally as well, right? Yes, Sakshi?
Correct, we have. Although I would say that, D2C in the US has panned out quite differently from what it has in India. A lot of the D2C brands that have built in the US, they have been accused of having built it very capital inefficiently, losing a lot of money, and not yet profitable. I think India's story is being charted very differently. The founders are, at least the founders, we kind of intersect in this landscape, are building it exceptionally frugally, thoughtfully, with profitability at the front and center of what they do. So I think D2C will definitely play out a lot differently, simply because it's also omni-channel. It's not pure D2C in that sense in India.
No, I actually have noticed this even in other segments, that because while people always say that in India the price points are very low and therefore they're skeptical of building India-focused businesses, I think the CAC is also lower somehow, and it kind of compensates for the lower price points, and you're able to build businesses quite frugally over here. That's been my experience. even though I'm not a D2C investor at all. But that's been my experience in other spaces. And I don't know if that's the result that you're seeing Indian companies build businesses more frugally here.
I think it's just it has to do with the mindset, is my view.
It's a good mindset, isn't it?
Of course, investors love that mindset.
One question, probably, coming from a founder, is what do investors like you bring to the table apart from money? And what has been your experience? Where are you able to help your companies apart from just money?
Sure, I can take that. So I think it's just money. Money is undifferentiated, right? We don't really believe that's our right to differentiation. I think what we have done over the last 14 years in India is built an in-house team of experts, and these are experts with anything between 15 to 25 years of experience across marketing, across recruiting, across tech, product, across legal, finance. And these are our in-house specialists who work with our portfolio companies and help them problem solve on some of these functional areas. I think aside from that, given that we have a reasonably long investing history in India and also globally, um, while we may not always know what the founders should do, we can be thought partners and brainstorm with them on the future path forward. But we definitely have learned a lot from our experience in terms of mistakes we can avoid. So I think what not to do is something definitely I think founders are very happy debating with us because we've seen tons of mistakes also play out around along the journey and I think it's our fiduciary responsibility as good partners to always caution founders if they are treading in that direction.
Yes, I think I always tell companies I meet that one of the things we can do as investors is shorten the time to mistakes, and that's very valuable. But Abhishek, what's your take on this? I mean, what do you bring to early stage companies that apart from money? I'm sure you do a lot, but
so they have a lot of things, especially as I told you, resources. For some of the earlier stage companies is relatively lesser, right? So what we'll end up doing is actually spending a lot of time with the companies on their go-to-market strategy, on their brand building, the brand architecture, how to think about organization structures, at least from a slightly medium-term perspective. Simple things like, what should your MISs be? How should you think about corporate governance or, your financial backbone of the company? So, multiple things. So typically, let's say from our perspective, we have like a 10-pointer agenda that we work at least for the first year, with all companies. And, that's like the playbook for us. And in addition, this is more, specific to us, given our sponsor investors, have their own Spencer's, Nature's Basket, and a 2Yum distribution. There are a lot of times that we can really help with their offline distribution or listing with or speed to listing with modern trades, right? Which founders find it extremely helpful.
Yes, I can imagine that building it in a business group the way you are is a little different from, just a fund management house, and brings interesting benefits. So unless you guys have some final comments, I think we're nearly out of time, and I'm going to hand this back to the organizers. So if you have any final comments, guys.
No, I would just say, one big value which investors bring is really like connecting the dots, right? Like, for example, just the access you get into the portfolio, whether you're or any other fund. I think we all have a very vast portfolio of companies, and you can just learn from experience of other founders. So that's one. Access is one of the biggest benefits any founder gets.
Okay, thank you very much, guys. And with that, I'll hand this back to the organizers.
Thank you, Mr. Dev, Ms. Sakshi, and Mr. Abhishek. Thank you to our partners Infobip, Flipkart, and New Jagran Media